Has the property market ship sailed? With the market booming over the last few years, property prices have just continued to go up and up. Even though we've seen interest rate rises and we've got a cash rate around 4.35% at this point in time, the property market has not slowed down. Supply is lacking, demand is at all-time highs, the borders are open, jobs and wages are increasing. There's still a big gap between jobs and incomes and the average property price here in Australia, with homes looking in Brisbane around that $850,000 to $900,000 for the average home here in Brisbane City. Now, what are you going to do about it? It makes it really difficult when property's getting so expensive and wages aren't keeping up. Is it time to just give up hope and live with mum and dad, maybe live in the basement for the next few years? Maybe it's time to buy a van and be a beach bum. None of those things are wrong, but if you're wanting to break into the market and build a property portfolio, it is still possible to do it in 2024, and it's going to be possible in the future. You are going to have to make some significant sacrifices, leverage everything available to you, and be savvy throughout the process to build out a property portfolio. Now, where do you get started? Of course, you need money to make money. So work on your savings, build your buffers, grow your savings so you can start to look to buy property. Most people might look to put their savings in a high interest savings account to begin with, and then maybe dabble in the share market or crypto at this point in time until they've built up enough cash to put a deposit on a property purchase. Now, you're going to need 5% if you're a first home buyer to break into the market and avoid paying lender's mortgage insurance. So if you're looking to buy a house, say around $700,000, that means you need about $35,000 plus closing costs plus a buffer to be able to break into the market, which means you're looking at around $50,000 to $70,000 as an entry price point to buy a property between say $500,000 to $700,000. You need to think outside the box. Most people are going to struggle to save. They might go and buy a new house and land estate, which will take 2 years to build and have no equity in it once it's built. And then they'll wonder why they didn't get anywhere in terms of their property journey. In my opinion, you should be looking at buying established stock. In our business here at Purpose Property, we focus on buying property in a 35-kilometre ring around Brisbane. We buy houses as low as $550,000 at this point in time, up to several $1 million for our clients, whether they're an owner-occupier or whether they're an investor. Now, for our clients, it's important to do the analysis on their finances and what they can afford. So if you're starting out and you're buying your first, your second, or your third property, work out where your serviceability lies. It's going to be based on your income and based on your expenses and the equity or deposits that you have available to spend on a property purchase. So work with a savvy mortgage broker or work with the bank to maximize your borrowing power and look at buying the right properties to build out your asset base. I think people should focus on capital growth assets first, looking at land component, which land is going to do most of the heavy lifting when it comes to property. There's an old saying out there that land does 80% of the heavy lifting. So rather than focusing on apartments and townhouses, try and break into the housing market if you can afford it. Now, this is not always possible. So if you're going to end up having to buy a townhouse or an apartment to break into the property market, don't get a new build that's just been recently built in the last 12 months or the last 5 years. Try and find established stock which is low maintenance and doesn't have any lifts, doesn't have any fancy swimming pools or gyms, but it's going to tick the boxes with less dwellings on the actual site. I personally like unit blocks which have 8 units on the block or up to 16 units on one site. Similar with townhouses, if you can have a smaller complex with lower body corporate fees, it's going to help your net yield and help you maximize the land component that's related to your specific property on that site. Now, it's important to know that you haven't missed the boat on the property market because we're playing a long-term game. Although property prices have risen significantly over the last 3 to 5 years, we are making a 10, 15, 20-year decision when it comes to property investing. People who want to retire overnight from property usually need a massive amount of capital behind them, $2 to $5 million to retire overnight in terms of property. And that's most people's targets in terms of net equity or their net worth to actually retire from property. Most Aussies who are looking to create a passive income of around $100,000 a year will need between $2 to $3 million of net assets or property unencumbered by debt to actually get that passive income. So take that long-term horizon of the next 5, 10, 15, 20 years, and you'll be able to make more sound investing decisions. Emily and I have always taken that approach. When we analyze and look at a property purchase, we should be taking that long-term horizon. It reduces the stress when it comes to making that purchase because you know you're making a long-term investment decision, and you also need to analyze your cash flows on the deal to make sure you can comfortably hold the property. The recent time that we didn't take a long-term decision and we actually bought for a short-term purpose, which was our flip project in 2023, we actually had one of the worst outcomes we've ever had when it comes to buying an investment property and looking to make money. That short-term perspective, the lull in the Brisbane market, which we had late last year, and the rising interest rates really hurt that project. So in my opinion, to de-risk the purchase, to give yourself the biggest potential for making capital gains and growing your property portfolio, you should be taking that long-term view. There are some amazing strategies that you can use if you're willing to actually fast track your property portfolio too. Emily and I have done things like house hacking, where we rented out rooms in our place to get some extra income. So you can have flatmates where you might have a 3-bedroom house and you've bought the place, so you've lived there for 6 months and you want to rent out some rooms. Maybe you have 2 other flatmates that pay you $200 a week each, and that's really going to cut into your mortgage. Maybe you're in a couple, you're in a relationship, and you want to build your property portfolio together. There's an ability for you to extend your serviceability and grow your asset base faster. How about you look at maybe some cosmetic renovations? That's been a big thing for Emily and I in terms of building our property portfolio quickly. I get asked all the time, Luke, how did you do it? How did you grow your property portfolio in such a fast manner to get over to $5 million worth of assets? For Emily and I, we used as many strategies as we could, stacking those strategies on top of each other to maximize our growth and our potential in our property portfolio. We used strategies such as cosmetic renovations, where we got in, we did some dirty work, we had some elbow grease there, and we painted places, we sanded floors, we added a lot of value to these homes and increased the rent and increased the market value of the property. And then we used my chartered accounting and my finance background and my skills in negotiating to actually leverage those properties, go back to the banks, get more debt, and then we continued to build the asset base. Now, some people might argue, oh, Luke, you don't know what it's like in today's market. You know, I'm on $50,000, $60,000, $70,000 a year. I'm on minimum wage making $40,000 a year. I'm struggling to break into the market. In the first few years of our property investing journey, I was earning $45,000 a year and Emily was working part-time. I then slowly grew my income from $45,000 to $50,000 to $60,000 in my first 3 years of work, and we were able to buy our first property in our 3rd year after saving $66,000. It's a snowball effect. It's always going to be most difficult pushing that snowball over the hill, and that's typically your first property. Once you're able to get your foot in the door, as long as you buy the right property for the right price in the right location, you can then see that snowball start to roll down the hill and gain momentum. We certainly found that was the case with our asset base. We bought our first property, which took us years to save for and years to break into. We then added value through cosmetic renovations, refinanced, and we were able to buy property number 2 roughly 18 months later. We were then able to buy property number 3 only 6 months later because we did a renovation on property 2, refinanced both property 1 and 2, and that enabled us to buy property 3, and then so on in terms of us buying property 4, which was our unit block purchase in Coffs Harbour. The snowball began to roll, we were able to gain momentum, leverage off our equity and continue growing our asset base. So with interest rates expecting to be cut in 2025, even if we see some interest rate rises in 2024, I think property in Australia is going to continue to be an asset that's sought after, that's safe as houses, as they say, and money will continue to flood back into property. It's one of those things at its core that everyone wants. Everyone wants shelter, and they also want to make their house their home. People spend money on their homes in terms of upgrading, renovating, making their lifestyle easier. So as more money goes through Australia's economy, it always ends up flowing back into businesses and back into the property market. So over the next 3, 5, 10 years here in Australia, not just Brisbane, I think there's potential for Australians to look to buy and build a property portfolio. If you're looking to buy a property in the next 3 to 6 months here in the Brisbane market, then head over to purposeproperty.com.au where you can book in a free strategy session. We'll sit down, talk about your specific circumstances and how we can help you secure a property here in the Brisbane market, whether you're an owner-occupier or whether you're an investor. And in addition, if you're looking to grow your knowledge and you're looking to buy and build a multi-million-dollar property portfolio, we offer a course for under $500. That course is going to walk you through the end end-to-end process of building a property portfolio. It comes with spreadsheets and video examples of exactly how to scale and build that property portfolio. And you can find that as well at our website at purposeproperty.com.au. I'd love to hear your thoughts in the comments below. Is the property market too far gone for most people? Are the rich going to continue to get richer while most people suffer and struggle with the property market? I'd love to hear your thoughts. Thanks for sticking around to the end of this video. Click this video over here because YouTube thinks you really like it, and I'll see you in the next one. Peace.